So Vincent, today we're talking about Shell, and it's been 10 years this week since the big reserve scandal that shocked the market. Now in the intervening decade, Shell has been a far quieter company than BP, which has had all kinds of problems. But how has that decade been for Shell investors? Should they be pleased with its progress?
Well, I think it's been a bit indifferent actually as a period of time for if you're a Shell investor. I mean, the shares have essentially performed in line with the stock market. You know, one would have thought that a company of Shell's size and its sheer spending power would have, beaten the market at least. But one thing you can say is that Shell has made a very impressive recovery from the scandal, because that was a very destabilising moment for Shell. And it has regained the respect of the industry. It has, spent its way back to respectability. So I think that it's been an indifferent decade. I think the question is what the next decade is going to be like, and this is where I think all of the questions now sort of concentrate on Shell.
So the company's got a new chief executive who joined at the start of January, so he's now 10 days into the job. What does he need to do to turn it into a more exciting company?
Well, the sort of perennial question that surrounds Shell over the last 10 years really is this question of growth versus returns. The company has been very concentrated on growth and on investment and on capital expenditure, and shareholder returns have tended to be a consequence of that, rather than shareholder returns coming first and spending coming second. Shell is now a company that concentrates on big things, so it has very big projects. It spends an awful lot of money. I mean, $45 billion of capex in 2013. That's a lot of money. And yet, as I say, the share price performance has been indifferent. So, it pays a very big dividend, but it kind of lacks the kind of, it needs to look after its investors, I think, a bit more than it's been doing up to now.
So perhaps then a case for more cash returns once its capex programs sort of tail off. But
that will happen, by the way, I think, yeah.
How then does it stack up against BP, its big UK-based rival as an investment? Is it looking more attractive these days?
Well, it's certainly a more predictable company than BP. I mean, I think one of BP's problems has been its relative unpredictability. Obviously, the Deepwater Horizon tragedy in 2010 was that was BP's sort of moment of crisis and destabilisation. I think as a growth stock, BP probably has more potential because it's still recovering from Deepwater Horizon, and it's always been very active on the production and exploration side, and it's just a bit more get up and go and a bit more gung-ho than Shell. I think that Shell is the more predictable, but if it just, I think, needs to show a little more TLC towards investors, and I think that could be its distinguishing point among its peers.
So certainly plenty of challenges ahead for the new chief executive as he gets his feet under the table. Vincent, thank you very much.